Endeavour Vision is a Geneva-based venture capital firm investing globally in highly innovative companies. We just raised our third fund, which is Endeavour Vision MedTech Growth. It's a 250 million euro specialty fund that's investing in growth stage medical device and digital health companies, primarily in Europe and the US. And we look to partner with successful companies that are past the early technical and clinical stages and looking to raise additional money to support further clinical trials, to further regulatory and reimbursement activity, to scale up operations, and to either initiate or accelerate commercial activity in the markets where they're already cleared. A lot of the things that most investors will look for in terms of having a large unmet clinical need in a fast-growing market, having distinctive and differentiated technology that's protected by strong IP, and having an excellent management team that can take that large market opportunity and that strong technology and turn it into a successful business. In addition to the sort of classic elements that we look for as investors, as I mentioned, we're a growth stage fund, so we look for companies that have already cleared some of the early, what we call binary technical or clinical risk on the product development side and on the early clinical side. Often it's a company that's had some successful small-scale human trials, gotten a CE mark, but needs to do larger confirmatory trials, expand, as I mentioned, in Europe, and in many cases run a US regulatory trial, whether a 510K de novo trial or a US PMA trial, and those are generally large trials that require significant additional capital beyond the early Series A or seed stage capital, and we tend to come in the later financing rounds, starting with Series B, but most of our activity is kind of C, D, the occasional E round investment. In many ways, we're sort of partners with the entrepreneurs that ultimately the goal is to help build successful companies and launch these technologies. It's often a long and difficult and increasingly expensive process to take a product from the conceptual stage through to full market clearance and reimbursement in the US, and that's kind of the full life cycle for many medical device companies. I think there's three general phases to what we do. The first is sort of identifying and selecting the opportunities that we're going to invest in and partner with. That's mostly on our side, but obviously, we're very much involved with the entrepreneurs and their earlier stage investors in terms of understanding the opportunity and making sure that it fits with our fund criteria and our return expectations. Once we've made that investment, we're very much partnered with the companies to help them successfully grow the business and create value. We bring a lot of investing experience, but Endeavour, I think, is quite unique in terms of also having a very seasoned operating team on the medical device side, particularly with several industry veterans, whether on the commercial side, the regulatory side, or the product development side. We've made sure to have folks that are involved with our portfolio companies that can really help them throughout that process. And then the third phase is really having built a successful technology or a company, finding ways to realize that value either through a sale to a strategic or in many cases a public offering of some sort. So I think those are the three phases, and by and large, there's alignment. I think inevitably in the investing process there's sometimes disagreements about value and structure, and those are natural areas where there can be some tension between investors and entrepreneurs. But outside of that, I think everybody is very much aligned on the goal of building successful companies, and we look forward to partnering with our portfolio companies to help them do that.